Hey guys, welcome back to our channel. If you are new here, don't forget to subscribe and hit the notification bell for more trading tips and strategies. Today we are diving into a crucial aspect of forex trading, risk management. Whether you are a seasoned trader or just starting out, mastering risk management can make or break your success in the forex market. First, let's understand what risk means in forex trading. Risk is the potential of losing your investment. In forex, risk can come from market volatility, leverage, geopolitical events, and economic events. Without proper risk management, even the best trading strategies can fail. Why is risk management important? Simply put, it protects your trading capital by managing your risk. You ensure that you can stay in the game long enough to see your strategies pay off. It helps you avoid catastrophic losses and keeps your emotions in check, promoting disciplined trading. Let's discuss some key risk management strategies, right? So you can use position sizing, right? What's position sizing? This is the amount of money you allocate to a single trade. A common rule is to risk only 1 to 2% of your trading capital on any single trade. This way, even a series of losses won't deplete your account. And with the MetaTrader 5, you now can see how much you are losing on your stop loss, so you don't have to calculate using pips. So you can see how much you're losing when you place a stop loss in a certain area. So it's easier for you to do these calculations. You don't have to have a pip calculator or to learn how to calculate using pips. The second one is stop loss. A lot of people shy away from stop losses because in the market there are things like the stop hunt. So the market hunts your stop losses. But stop losses can be really helpful if your analysis are wrong or the market is not choosing your analysis. So a stop loss order automatically closes a trade at a predetermined price to limit your loss. Always set a stop loss to ensure you don't lose more than you can afford. So per trade, you using the position sizing, planning to lose 1 or 2% of you're risking 1 or 2% of your account. So you're planning to lose 1 or 2% of your account. So your stop loss, you already know how much you're willing to lose. So even if there's a stop hunt, do not allow your negatives to go beyond that money that you've set to lose. That's called discipline. Even though it hits your stop loss and goes back in your direction. Okay, cool. That's a lost trade. You see another trade. That's called discipline. The third one is leverage control. Leverage can amplify both gains and losses. Use leverage wisely and understand the risk involved. It's safer to trade with lower leverage, especially if you're a beginner. I know a lot of traders are interested in the fact that you can open 1 million trades with just $5 in your account. They flex with that. I just opened 0.10 with $2 in my account just because you upped your leverage. If that position moves slightly into the opposite direction, everything is gone. So there's no point of you trading. You're basically gambling. You are basically gambling. So make sure that you have your leverage set to a trading level and not a gambling level. The fourth one, do not put all your eggs in one basket. Right? Trading different currency pairs also reduces your risk, right? Other pairs can go the other direction due to economic activities or geological activities, and then your strategy can fail. But it's not that in every area the same thing is gonna be happening. So in other pairs your strategy can be respected, and in other pairs your strategy can fail. So in that case, if you have spread your money across different pairs, some will win, some will lose. And then risk reward ratio. So aim for risk reward ratio of at least 1:2. This means that for every dollar you risk, you aim to make $2. This helps ensure that your winning trades outweigh your losing ones. So same with number 4. So you're putting your eggs in different baskets, and then you have a 1:2 risk reward ratio. So it means that if out of the let's say 5 pairs, 3 lose and then 2 win, right? So with the 3 that lost, let's say it's $1. So you lost $3, and then with the 2 that won, it's 1:2. So it's 2, 4. So you won $4. You lost $3. You won $4. So you have a profit of $1, but you lost 3 trades and won 2 trades, but you're still in the profit side. So that's where risk reward ratio comes in. So all these strategies, risk management strategies, I just laid out for you. They work together. You cannot just choose one and say, okay, you know what, my leverage is under control, I don't need to put a stop loss, I don't need a risk reward ratio because I already have my leverage in control. You can't do that. You can't use one in isolation. You have to use all of them. If you implement all of these strategies, I don't see you losing. Right. So, psychological aspects of risk management. So, risk management isn't just about numbers. It's about managing your emotions. Stick to your trading plan and do not let fear or greed dictate your actions. Remember, consistent and disciplined trading is key to long-term success. So a lot of emotions that affect our trading progress is fear and greed. You see these two, they are the biggest ops. They are the biggest ops when it comes to trading. So if you can stick to your plan, no matter what happens, you are going to meet losses, you are going to meet wins in this game. So you need to stick to your plan no matter what happens. So now let's do a little bit of a very practical example, right? So let's say you're starting with a $100 account, right? So you've got a $100 account, and then your plan is to risk 2%, right? Is to risk 2% on a 1:3 ratio, right? So you're risking 2% on a 1:3 risk ratio account, right? And you're starting with $100, and you are using a strategy that is, let's use a low probability strategy, so 60% win rate strategy, right? this is a little bit low. Most of the strategies you see, if you back test them, they can go up to 80. Some can even go up to 90. So using a 60%, right? So this is on the low end. So I just want to show you how profitable you can be if you are implementing your risk management plan. How profitable you can be. So this is the layout, right? So you've got a 60% win rate. So let's say 100 trades, right? So you have got like 200 trades. Let's say this week or in a month or in 2 weeks, right? So out of these 100 trades, 60 trades, 60 trades are what? Are a win, right? And then 40 trades loss, right? So it's a 1:3, and you are risking 2%, right? So 2% of $100 is $2, right? And then that means that you have to win 3 times your loss. So 2 times 3, that's $6, right? So that's $6. So it is your risk reward ratio, right? So let's say for these 100 trades, you're using a fixed risk and a fixed risk reward ratio. So what I mean by that is, no matter how high your account goes or how low your account goes, you were still risking 2% of the initial amount. So we're using $100 as our mark, right? So whether our account is at 150, we are still risking $2. Whether it's now at 200, we are still risking $2, right? So we are using $100 as our mark, right? We're not changing that, right? So let's see, right? So with this loss, so now that's 2 times 40, right? Because you lost 40 trades, so that's $40, right? So basically what you're saying is that you lost $80, and then you won $120, because it's 60. Sorry, I multiplied by 2 instead of 6. You multiplying the 60 by 6, because that's gonna be a win. That's 360. And then the 40 you multiplied by 2, and then you get your 80, right? And then you are at what? You are at 100, right? USD. That's where you started. And then you won, so your profit there is 60, and then you lost $80, right? So you have 380. You have $380 in your account, right? So basically your profit is 280. Your profit is $280, right? And your risk is, so profit 280, risk 80. So you're risking $80. You risked $80 to make $280. So now when you're at 380, now let's just do the 381 just for fun, right? So your account is at 380. The maths don't lie. So if you implement your risk management plan, you don't get emotional, you don't get afraid, you don't get greedy, you stick to the plan, I guarantee you, you are going to win. The maths don't lie. So if you are sure that your strategy has a certain win rate, and you know that win rate, and you stick to it, you are guaranteed to be a profitable trader. So hit that like button, subscribe, comment below on your experience of trading or what you would like me to cover next, and I'll see you all on the next video.